Hey all, good morning and welcome to Share Trek. This is Raj here. As I start this recording somewhere around 7:20 a.m. in the morning, the futures for Dow, S&P and Nasdaq are green. Today we should expect some trickle down of information from the Fed meetings, which is probably why the market is a bit green. Probably just technicals and adjustments of sentiment with a little fall yesterday and a little gain today. I think we're just probably consolidating. I don't see any reason why we have to be green today. But we'll find out. Let's get started with the morning show. Welcome back, friends. Market do move on rumors sometimes. So apart from the technicals or fine-tuning sentiments, the rumor that China may ease its zero COVID policy is also partly contributing to the bullish sentiment, in my opinion. I'll consider this as a bear rally if we have a green opening and we continue to go green. And I'll explain the details why when we do the technicals. The Fed is also expected to raise interest rates. It's an expectation that has been set quite a while ago. The rising interest rates is like steering a large ship in the ocean. It takes a while for all the steering to show its effect, and it takes time for past interest rates rate hikes to reflect. And therefore, there is always a risk of either overdoing the rate hikes or stopping short because of fear that rate hikes might be overdone. So the Fed has a very difficult task in front of itself. And that said, let us take a look at the housing market, US housing market, that is in really difficult situation. Check out this NAHB housing market index graphic here. The NAHB housing market index in the US fell for the 10th straight month to 38 in October of 2022. Half the level it was just 6 months ago. If you look at the last candle out here, it's at 38. So you can see the dramatic fall that it has had. With just 6 months ago, it was much higher than this, and it's right now below market forecast of 43. It's at around 38. This was the lowest reading since August 2012, with the exception of the onset of the pandemic in the spring of 2020 due to the rising interest rates, building material bottlenecks, and elevated home prices. Current home sales have fallen 9 points to 45. Sales expectations in the next 6 months declined 11 points to 35, and traffic of prospective buyers fell 6% to 25, all because high mortgage rate approaching 7% have significantly weakened demand, particularly for the first time and first generation prospective home buyers. The current average rate for the benchmark 30-year fixed mortgage in the US is 7.32%, which is up 15 basis points over the last week. So friends, as the mortgage rates goes up, the affordability and also the ability for buyers to qualify for a mortgage keeps on going down, and that puts a real big chill on the housing market. And as I mentioned before, many people have home equity line of credit, which taps on the paid up equity of the home. So higher the home value, the more they have the line of credit, which can be used for buying things like cars, boats, holidays, home renovation, things like that. All those things are like to be scaled back as well. So it's got a big impact on the economy, so we can't overlook that. The interest rate hike that we are expecting this week will surely push the housing markets to the limit, while at the same time, if you look at the corporate greed side, like President Biden has been constantly asking the oil companies to reduce the oil prices and stop price gouging. We have BP releasing its result, and they made a bumper profit of $8.2 billion as oil prices remain high. So if that's not price gouging, what is it? Because if there was difficulty in the oil market, then the oil companies should have suffered, and they should have suffered sales, they should have suffered losses. Just because there is very low elasticity of demand for oil, which is a necessity, doesn't mean that these companies have got to go and make such super profits. They could have done a little bit to help the economy overall. But we are also shareholders in oil companies. We as shareholders have to push the management to have some amount of restraint in how they do business. It's a failure on our part as well as shareholders. So basically, if I look at the overall things, I would say that any positives is like applying lipstick to a pig. Unless the underlying issues are resolved, we cannot see a return to bull markets. Two dominoes to fall very soon will be the midterm getting completed in a couple of weeks and therefore giving us a relief, And also, if the rumor about China relaxing zero COVID policy comes true, that will help as well. And if these two things happen, then we can definitely expect a Santa rally. And unless the Santa rally breaks through our major bear channel, I think we are still going to be in a bear market rally, and that would not constitute a bull rally. And I'll talk more about that when I do the technical analysis. So now let's go and have a look at the pre-market action now. Well, here we are in our TradingView platform, and I'm looking at the Nasdaq futures. And as you can see, it's neatly following this bull channel within the bear context. If you look at the overall picture for Nasdaq futures, I'm just going to zoom this out so that you can see the bear channel in which we are riding. We are in a long-term bear channel out here. For us to break out of this bear channel and start a real bull rally, we have to be beyond this diagonal red line of resistance of the major bear channel. So right now we have a bear rally going on, and it's using this diagonal line of support as a bear channel, as a bull channel. And you can see that we are bouncing off this, and we also have the support from the 10-day simple moving average, which is sitting at 11,409.75, which is this thick yellow line out here. So I think we are coming to a situation where the markets will have to decide whether they're going to fall down below this pennant or they're going to go up. Typically, when we are on a pennant which is on a downward trend, we expect us to break downwards. But if we would be surprised if it goes and breaks on the upward side, because there are two resistance points out here. And as you can see, our resistance out here at 11,597 has been very strong for the last 3 days. Are we going to be able to break through this today? Because this is the candle for today. This is the green candle that you see here is the candle for today, and we are just short of 11,597. So if we break through this, then our next resistance is going to be at 11,665. And if we break that also, then our next resistance after that is going to be the 50-day simple moving average sitting at 11,733.55. So as you can see, there's a lot of headwinds out here. And also the theory says that if there's a pennant on a downward trend, then the pennant is going to push the price action to break out on the bottom side of the pennant, which means further losses. Our MACD is bullish and momentum is also above average and pointed upwards. So today it's definitely a green day. If you look at the indicators, let's look at US oil. US oil is up 1.63%. Again, it's not a good sign for us. We are in a pennant out here, which is likely to break out on the upper side and challenge the resistance at 91.70. QQQ was down 1.16% yesterday, and already pre-market we are up 1.13%, and we are getting a support from 278.43 at this point of time. Because we are already above it at 281.08, and our resistance is going to be at 282.10, failing which we have the 50-day simple moving average, which is at 285.49. That's going to perform the next resistance out there. Our MACD is bullish and the momentum is just at 50%. And if you look at S&P 500, we were down 0.72% yesterday, and we are almost recovered most of the loss by being up 0.95% pre-market. And if we were to look at the diagonal line of support out here, which is going to be providing the long-term support, we are still tracking along with it. And today our market price is somewhere out here. And therefore our 100-day simple moving average, which is this thick blue line, which is sitting at 389.15, has been converted into a support. And if we open above that, then our next resistance is going to be the 200-day simple moving average, which is sitting at 409.96. Let's look at IWM. IWM was up 0.09% yesterday, and today pre-market it's up 1.09%, thereby converting this resistance at 183.72 into a support. And our next resistance is going to be the 200-day simple moving average, which is sitting at 187.12. And our MACD is bullish and momentum is also above average. Let's look at Dow Jones Industrial Average. It was down 0.35% yesterday, and today pre-market it's up 0.60%. And what I see here is a double bottom formation, which is always a trend reversal, and we have been going up strong. Now, if I look at this in conjunction with QQQ, which has got a reverse head and shoulder pattern, which is also a bullish trend, and in S&P 500 it's not very pronounced, but if you look at Russell, again it's got a double bottom out here, in my opinion, because there's a bottom here and there's a bottom here. So overall, they're all indicating towards a kind of bullishness, we are definitely seeing a bullish open today. And we have VIX, which has dropped 0.27% this morning, and it has fallen below the two supports, which are very strong. They were the 100-day and the 200-day simple moving averages. So we are looking pretty good at this point of time. And also you can see that the MACD is subdued and bearish, and the momentum is also way below average and much closer to the 30% mark than the 50% mark. So it's all looking good out here. And if you look at the US dollar index has fallen, which also means that funds are going to come out of US dollar index into the stock market. The MACD is bearish and the momentum is also below average and it's falling down further, which indicates that US dollar index could fall further today. So with that said, I think we are all looking at a bullish open and further green in the market until we get any catalyst, which is to the contrary. Now, if you look at the index movers, I'm first looking at Microsoft, which was down 1.59%, already up 1.02%. And then if I was to look at Apple, which was down 1.58%, already up 1.08%, it's formed a doji candle. Yesterday, there was a bit of indecision and it bounced off the two simple moving averages, which was the 100-day simple moving average and the 50-day simple moving average. So today we have broken through all of that. We are still within the day range of day before, and our next resistance is the 200-day simple moving average at 156.65. I think that Apple is definitely picking up and supporting the index today along with Microsoft. Amazon is also up 1.15%, and it's trying to cover the gap that it created a day before, and I think it's also going to pick up. It's at the very bottom, so it has got to bounce off now from the 30% mark. If you look at Google, Google was down 1.99% yesterday. Today it's up 1.10, and we had a support at 95.74, which is performing the role of resistance at this point of time, because we are at 95.70. We need 4 more cents to jump over and cross this resistance. Don't know if this can happen today, but given the fact that all the other index movers are positive, I think Google should also pull through and help support the index. That said, if you look at commodities, wheat is already escalating further up. This is going to be aggravating the situation overall, and a good portion of this has to do with the Russia-Ukraine conflict, and this is going to feed into inflation along with oil prices. We can say that we can't control wheat, but at least we can control the oil prices. So once again, the oil companies need to do a responsible thing and put a lid on the oil prices, increase the production, reduce the profit margin, do something. Copper is up around 2.78%, and we are trying to break on the upper side of this pennant, which is what is likely to happen because we are on a pennant which is on an upward trend. Therefore, I think we are going to challenge the 50-day and the 100-day simple moving average before moving down anymore. Then let's look at our Genomics shares. I'm just going to sort this out so that we have the winners at the top. Invite as the winner of yesterday. I couldn't pick up any Invite. It has not come down at all, but I'm pretty sure that it's going to come down sooner rather than later. We have a bullish MACD. We have momentum, which is also above average. Pre-market, we are up 2.33. Our next stop is the 50-day simple moving average and the 100-day simple moving average, both of which are sitting at 2.76 and 2.81%. And then we look at DNA, which was up 1.49% yesterday, and it's already up 1.47% this morning. And it has converted our resistance at 2.68 into a support, and our next resistance is the 50-day and the 100-day simple moving average, which is sitting at 2.85 and 2.89 respectively. And our MACD is bullish, but momentum is still below average. I believe that DNA can pick up again today. Bluebird was up 0.48% yesterday, and it's up 1.28% this morning. Again, still there is no new news from Bluebird. We are all awaiting news about how they are going to commercialize Skysona, and also progress on Zynteglo. They have their earnings coming up on 3rd of September, which is when I think we should hear something from them. So in anticipation, the prices are moving up, and I think we are going to have resistance at the 50-day simple moving average, which is sitting at 6.36, failing which we'll have a resistance at 6.44, which is the horizontal line of resistance. Teladoc was up 0.30% yesterday. It's up 1.89% this morning. Caribou was down 0.31% yesterday. No trades pre-market. SQZ Biotech was down 1.05% yesterday. There is no trades pre-market. And if you look at ARC, it was down minus 1.23% yesterday. No trades pre-market. IDNA is down 1.48% yesterday. No trades pre-market. Editas was down 1.49% yesterday, and pre-market we are up 1.12%, and our 10-day simple moving average sitting at 11.96 is still a support, and our resistance at 13.14 is still a resistance at this point of time. And if you look at Illumina, which was down 1.79% yesterday, there is no trades pre-market today. It has fallen below the neckline, which now becomes a resistance for us, and it's forming a handle out here. I'm expecting it to bounce off the 10-day simple moving average sitting at 222.88, after which it can start taking off after a bit of consolidation, or right away it can take off, and the checkpoint will be the 259.10 simple moving average. That's the 200-day simple moving average. And if we cross that, then we'll come to 270.69, which is the maximum extent of bounce that we can expect from this cup and handle pattern. If you look at PSTX, it was down 2.15% yesterday, no trades pre-market. Intelia was down 2.31% yesterday, no trades pre-market. IMTX was down 2.42% yesterday, no trades pre-market. PSEB was down 3.21% yesterday, and pre-market it's up 1.54%. Again, it's forming the handle out here. There'll be a bit of consolidation, a bit of fall, and then go up. That's what I'm expecting out there. And if you look at CRISPR Therapeutics, it's down 3.59% as of yesterday. No trades pre-market, and our support at 52.13 is still holding us. And if we fall below this, then we are looking at the next level of support, which is most likely to be somewhere out here. This is going to be the next line of support, which is at 47.93. That's what we are looking at. And if we look at Allogene was down 4.36% yesterday, no trades pre-market. Verve was down minus 7.37% yesterday, no trades pre-market. And Beam was down 9.60% yesterday, no trades pre-market. And with that said, my friends, I would like to bring this video to an end. If you like this video, please do not hesitate to press a like out there. And if you're not yet subscribed, please subscribe and help us grow this channel. Good luck ahead for you today in the market. Bye for now.